Silver just hit $50 an ounce for the first time in over a decade, and I'm watching beginner investors make the same mistake that'll cost them thousands. Today I'm showing you exactly how to buy precious metals the smart way, and the one premium trap that drains your wallet. Before we dive in, quick heads up. This video is for educational purposes only. This isn't investment advice. You should do your own research and talk to a qualified professional before making any investment decisions. Now, let's get into it. Over the years, I've watched the precious metals market go through wild swings. Here's what most people don't realize. There's a massive shift happening right now. Silver's up over 60% from last year, gold's setting records, and central banks are buying at rates we haven't seen since the 1960s. But here's the problem. Most first-time buyers get absolutely crushed on premiums and collectible scams. Let me show you how to avoid that. But first, let's talk about why this matters today, November 2025. According to the World Gold Council, central banks added over 1,000 tons of gold to their reserves in 2023 and 2024. That's record buying. The US just added silver to its critical minerals list in 2025. Why? Because industrial demand, especially for solar panels and electronics, is surging. But here's what the financial industry won't tell you. The precious metals market is only about $220 to $500 billion globally, depending on how you measure it. That's tiny compared to stocks or real estate. So when big money moves in, prices can spike fast. We're seeing that right now. Silver hit $54.50 in October 2025, its highest level in over a decade. This is when smart money pays attention, but most people rush in and make critical mistakes. Here's what I see constantly. People buy their first shiny coin at a local shop, pay $15 over spot price, then wonder why they can't sell it later without taking a huge loss. The secret nobody tells beginners. There's a massive difference between collectible coins and investment-grade bullion. Collectible coins are graded, slabbed, and marketed as rare. Dealers make huge margins on these, sometimes 30 to 50% markups. Investment-grade bullion is different. It's pure metal, priced close to the spot market. Think of it this way. A collectible coin is like buying a vintage car. An investment-grade bar is like buying a new Toyota. One might appreciate, but the other gives you reliable value. Most beginners should stick with investment grade. How to buy silver safely. Let me walk you through my exact approach. Step 1. Start with 0.999 fine silver. That's 99.9% pure. This is the standard for investment grade silver. American Silver Eagles, Canadian Maple Leafs, or generic bars all work. Step 2. Understand premiums. As of November 2025, silver is trading around $50 per ounce, but you'll pay a premium, typically $2 to $5 over spot price for common bullion. That's normal. Government-minted coins like Eagles carry higher premiums than generic rounds, but they're easier to sell later. Step 3. Buy from reputable dealers. I'm talking about established companies like APMEX, JM Bullion, or SD Bullion. Check reviews. Avoid anyone calling you with limited-time offers. Step 4. Start small. You can buy a single 1-ounce silver eagle for around $55 right now. 10 ounces cost about $550. Don't overextend. Step 5. Storage matters from day one. Home safe, safety deposit box, or allocated storage with your dealer. Never advertise what you own or where it's stored. The key here, you're protecting wealth, not chasing quick profits. Now, should you buy silver or gold? Here's my framework. Choose silver if you want. Higher volatility and potential returns. Industrial demand backing the price and lower entry cost. $50 an ounce versus $2,600 plus for gold. Go with gold if you want. Ultimate stability and universal acceptance. Easier to store large amounts of value and less price volatility. My advice? If you're just starting and have $500 to $2,000, begin with silver. Build a position of 10 to 50 ounces. Once you've got that base, add gold. A balanced precious metals allocation might be 60% silver, 40% gold for someone in accumulation mode. Over the long haul, gold is your anchor, silver is your growth play. Before you buy anything, watch for these red flags. High-pressure sales tactics. If someone's rushing you, walk away. Legitimate dealers want you to take your time. Collectible value pitches. Unless you're an expert numismatist, stick to bullion. Don't pay huge premiums for rare coins you can't verify. Unregulated sellers. Check the Better Business Bureau. Look for years in business and actual customer reviews. Limited time offers. Metals trade 24/7 on global markets. There's no one-day sale on gold. That's a manipulation tactic. Storage you can't verify. If you're using allocated storage, make sure it's insured and audited. You should be able to verify your holdings. Bottom line, if it sounds too good to be true, it probably is. Let me give you a real example with today's prices. In early November 2025, silver was around $47 per ounce. Today, it's about $50. That's a 6.4% move in 2 weeks. Say you bought 10 ounces at $47, paying $3 premium per coin. Total cost, $500. Today, those same coins are worth about $53 each, including the premium. That's $530. You're up $30, or 6%, in about 2 weeks. But here's the key, and I can't stress this enough. This is not about timing short-term moves. Precious metals preserve your purchasing power over the long term. They're insurance against currency debasement, not a get-rich-quick scheme. Over the past year, silver has risen by more than 60%. Gold is up about 20%. Compare that to the dollar losing 3 to 4% annually to inflation. That's the real story. Storage is where most people get lazy. Don't. For amounts under $5,000, get a small home safe, bolt it down. Keep receipts and certificates in a separate location. For amounts up to $25,000, consider a bank safety deposit box. It only costs about $50 to $200 per year. Add insurance. For amounts over $25,000, look into allocated storage with a dealer like AppMex or a specialized vault service. This is insured, audited storage where you own specific bars. 2 golden rules. Never tell people what you own or where you store it. And keep the documentation separate from the metals. Here's something most people miss. Homeowners insurance often has very low limits on precious metals, sometimes just $1,000 to $2,000. You'll need a rider or separate policy. Factor that into your costs. Now for when to sell. Here's my selling framework. Take profits at 25 to 50% gains if you need the cash. Metals can stay elevated for years, but they can also correct sharply. If you've doubled your money, there's no shame in locking in gains on a portion. Rebalance if metals exceed 10 to 15% of your portfolio. As metals rise, they'll become a bigger slice of your net worth. Don't let them dominate. Hold during uncertainty. The whole point of precious metals is protection during a crisis. Selling during panic defeats the purpose. Never sell at the bottom. If silver drops back to $30 or gold to $2,000, that's when you hold. Or buy more if you've got cash. The worst thing you can do is buy high, panic during a correction, and sell low. Metals are a 10-year plus position minimum. Treat them that way. If you found this helpful, hit the like button and subscribe. I break down real wealth building strategies every week. No hype, just data. Next week, I'm covering why the ultra-wealthy are hoarding gold right now and what that means for everyday investors. Thanks for watching. Stay smart out there.